With this strategy, just predict the future with it, because it can only give more than one entry confirmation at any moment, but there are also very good positions. A trendline breakout strategy combined with Fibonacci retracement can be a powerful approach to identify high-probability trading setups. Here's a step-by-step guide on how to approach this strategy, including how to confirm entries with Fibonacci levels and identify critical areas. 1. Identify the trend and draw the trend line. Begin by identifying the prevailing trend, uptrend or downtrend. Draw a trend line by connecting two or more significant lows in an uptrend or highs in a downtrend. The trend line serves as a dynamic level of support in an uptrend or resistance in a downtrend. 2. Watch for trend line breakout. Wait for the price to break the trend line. A strong breakout typically has a candlestick close beyond the trend line, signaling a potential trend reversal or correction. Look for a clear candle close beyond the trend line. A long wick without a close could indicate false breakouts. 3. Use Fibonacci retracement for confirmation. Once a breakout occurs, apply the Fibonacci retracement tool from the recent high to the low in a downtrend, or from the low to the high in an uptrend. Key levels to watch: 38.2%. Minor retracement level signifies that the breakout may lack strength if rejected. 50%. Moderate level may indicate consolidation or possible entry point. 61.8%. Strong retracement level. If the price holds above below, it often indicates continuation in the breakout direction. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Confirmation. If the price retests the trend line and holds near a key Fibonacci level, it provides a strong confirmation of the breakout's validity. 4th, entry points and important areas. Initial entry. Enter on the retest of the trend line if confirmed by a Fibonacci level, preferably near the 38.2% or 50% retracement. Look for candlestick patterns like doji, engulfing, or pin bars as additional confirmation. Second entry opportunity. If the price continues toward the 61.8% retracement level and holds, this can offer a secondary entry with a favorable risk-reward ratio. Stop loss. Place a stop loss just below for uptrends, or above for downtrends, the trend line, or below the last swing low-high to reduce risk. Take profit levels. Use Fibonacci extension levels for targets. First target, 100% of the recent swing. Second target, 127.2% or 161.8% Fibonacci extensions for the price to extend in the breakout direction. Example. Workflow of this strategy. 1. Identify. Price in a downtrend. Draw a trend line. Second breakout, the price closes above the downtrend line, suggesting a potential reversal. Third Fibonacci. Confirmation. Price retraces and holds above the 50% level after a trendline retest. Enter trade. Place a buy order on this confirmation with the stop loss below the 61.8% retracement and the target near the 100% extension. Understanding trend line breakouts. A trend line breakout often signals a change in market sentiment or momentum. In an uptrend, a trend line connects higher lows, acting as support. A breakout below this line indicates potential weakness, suggesting a pullback or trend reversal. In a downtrend, a trend line connects lower highs, acting as resistance. A breakout above the line shows buyers gaining control, hinting at a reversal or a new uptrend. Pro tip: to distinguish a true breakout from a fake one, look for a candle that closes significantly beyond the trend line, accompanied by a rise in trading volume. This confirms that market participants are committed to the breakout direction. 1. Setting up Fibonacci levels for breakout confirmation. After a breakout, Fibonacci levels can offer significant insights into where price might find support or resistance. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.